What happens when countries stop trading fairly, or stop trading at all? Trade wars are economic conflicts where countries raise tariffs or impose barriers to hurt each other, as industries. They do not involve armies or weapons, but their impact can be just as widespread. Prices rise, jobs are lost, and global supply chains start to crack. So, how did we get here? One of the earliest and most famous trade wars began in the 1930s. The United States passed the Smoot-Hawley Tariff Act, raising taxes on thousands of imported goods. The goal was to protect American jobs during the Great Depression. But instead of helping, it triggered a chain reaction. Dozens of countries retaliated with their own tariffs, global trade collapsed, and the Depression got even worse. Since then, the world has tried to avoid trade wars. After World War II, countries worked together to lower trade barriers and prevent another economic collapse. This led to the creation of the World Trade Organization, which helps settle disputes and promote fair trade. But even with these systems in place, trade wars have not disappeared. In 2018, a major trade war broke out between the United States and China, the two largest economies in the world. The U.S. accused China of unfair practices, things like stealing intellectual property, manipulating currency, and heavily subsidizing its industries. In response, the U.S. raised tariffs on hundreds of billions of dollars in Chinese goods. China hit back with its own tariffs. At first, it looked like a strategy to negotiate a better deal. But as the tariffs grew, the costs started adding up. American farmers lost access to one of their biggest markets. Chinese manufacturers paid more for high-tech parts. Consumers in both countries faced higher prices on everyday goods, from washing machines to smartphones. Supply chains were disrupted. Companies hesitated to invest. By 2019, global trade growth had slowed to its lowest point in a decade. Eventually, a partial agreement was reached, but the core tensions remained. So, what happens if another U.S.-China trade war breaks out? First, we could see even higher tariffs on a wider range of goods, impacting everything from food to electronics. Prices would rise, not just in the U.S. and China, but globally. Countries that rely on trade with both sides, like Mexico, Canada, or Vietnam, might get caught in the middle. Second, supply chains would shift again, as companies scramble to find new sources and safer routes. That might boost some economies in the short term, but it also means more uncertainty, higher costs, and slower innovation. Third, a new trade war could amplify inflation. At a time when many countries are still recovering from supply shocks and rising interest rates, adding more price pressure could tip fragile economies into recession. And finally, it would likely deepen the political divide between the U.S. and China. Trade wars are rarely just about economics. They are about power, influence, and strategy. A long conflict could lead to greater separation between the two economies, with countries being forced to choose sides on trade, technology, and finance. But trade wars are not destiny. They are choices. Countries can compete without closing their doors. Cooperation does not mean weakness. It means finding ways to grow together, not apart. Because in the long run, the cost of conflict is always higher than the price of peace,